Welcome to Office Hours at TradersPost for January 21st, 2025. I'm Tom Hartman, Marketing Manager here at TradersPost, along with John Wage, Founder and CEO. We're here to answer your questions about using TradersPost to automate your trades. As always, we want to make TradersPost the best automated trading platform for you and your trading needs. And for that, we need you, your feedback, and your questions. So we thank you for them. How's it going, John?
What's up, man? It's good to be on the show. It's been a while.
Yeah, excellent. I'm usually at this point, my compliments me on my intro, so I'm just gonna wait a second for a little bit of praise. But hey, I get it.
I do love the intro. Before we came live, I was banging my head to the music.
Yeah, I want. You know what? I've been wanting to do one of those lo-fi screensaver tunes for the background. We're gonna put that on the channel because I'm always disappointed. For some reason, I never listen to the music on my own afterwards, even though I have the whole song. Doesn't make any sense.
Nice.
Well, it's gonna be nice to have you on the show today, John, because I got a bunch of small little questions that I just want to get your feedback on. But before we start with that, I just want to make an announcement. It's not a TradersPost announcement, but I like to include the TradingView announcements on the show. I don't know if you saw this, but TradingView now allows you to have alerts tied to watch lists. So now you could have hundreds of tickers on a watch list, ostensibly, and be able to tie not only alerts, but signals to them as well. So we're going to be going through that on Blueprint on Thursday. It should be pretty interesting. My question for you on that front is, does that open the door for an order of magnitude more signals coming towards us?
I think so. Well, maybe not more signals, but it allows the end user to be more flexible. But so you can... I guess two questions. When you set up an alert on a watch list, does it take up one alert from your quota, or does it take up N number of alerts based on how many tickers are in the watch list?
Oh, you know what? I don't know that. That's a TradingView account. Are we limited to the number of alerts we can create?
Yeah.
Or I can create unlimited ones.
No, there's a limit, unless they've changed that. But I remember back in the day, because I think I have 400 alerts.
Oh.
But anyways, I guess my next question is, can you populate a watch list from a scanner now? Because that would be the real next step. Is imagine because right now you have to manually pick the tickers for your strategy.
Right.
But imagine if you could have your strategy, you have a watch list, and then you have a scanner that feeds into the watch list. So every morning that scanner can run and basically select 5 tickers that get fed to the watch list, and those are the 5 tickers that you trade that day.
Not automatically, no.
So that would be, I think, the next really big thing. And I know you've kind of hacked something together that sort of lets you do that, where you screen in PineScript. But I want to scan the whole universe of stocks,
right,
or crypto symbols, and find the tickers that meet my criteria for whatever strategy I'm trading, and then pick 5 top tickers, and then feed those tickers into my strategy. So that way, every day you're picking the best tickers to trade for your strategy. And I know I've done it manually, and I think other customers kind of have that pre-market where the pre-market prep, where they run those scanners and find the tickers that they want to trade that day. But it's a pain in the butt because you have to edit your alerts and create new alerts for new tickers, and it's just very error prone. But if they had the ability to populate watch lists from scanners, that would be a game changer.
Well, I guess it makes sense if you want to automate it. Because what I used to do before, just have my scanner at the bottom, and then I didn't have to have a watch list. I just saved my scan as a particular type of thing, and I just clicked on them in order to change my chart. But you're saying for this alert thing, it wouldn't work that way. Maybe I'll do a little deep dive into that and see what we can do more of that run through on Thursday. But you're right, there is a limit of 400 alerts for the premium plan, and each plan has their own limit. So okay, so then we're safe there, because I was automatically thinking, okay, I'm going to add 1 billion tickers to everything.
Yeah.
What I'm curious about is if they allow us to, if it's actually taking all the details within the strategy, the PineScript, into consideration when it's doing all those alerts. Is it actually creating one for the different time frames and the different tickers? So I'm going to test that out and see. But that's for Thursday's show. For office hours here, we want to be going over the questions that you've been asking over the last week. So we'll just jump right into it. First, this is something that someone asked me the other day, and I thought it was pretty interesting that I couldn't easily find an answer, and that's how could I estimate what is a typical slippage for a particular asset? What should I expect? So it was funny. You can sort of get anecdotal information online as to what is the slippage you can expect for a particular asset, but you sort of need access to people that definitive list anywhere. Do you have anything like that?
I mean, it depends on the time of day, what's going on in the market. But I think the best way to estimate it would be to do some real orders with small size and see what the slippage is.
Right, exactly.
That's
Yeah, you
really
have to
the
look
only
back
way
on
to
that.
do it. I don't know. I'm not aware of any data providers that would kind of give you that information. I don't even know. There's real no way to I don't even know how you would collect that data, anyways.
What I was looking to how to do that, some people were saying, well, just take on platforms that provide you with a bid ask, just track what the bid ask spread is, and then use that as an indicator. Other people say, well,
Yeah.
just use ATR, and ATR will give you an idea of the range there. But then those don't take into consideration, like you're saying, volatility events or things like that. So you're like, okay, my typical slippage is like this, but then maybe I'm getting really wrecked on something else.
I think I would say also, like, generally, if you're getting to the point where you're like micro optimizing slippage, you're probably on too low of a time frame. That would be my personal opinion. Uh, if it's really that much of a factor for your strategy and the slippage is messing you up, you need to move up in time frame. That would be my kind of generic answer.
Yeah, I'm trying to remember when I first started trading. I remember I had this sense that the lower the time frame I'm on and the faster I do the trades, the more money I can make. I don't know how that got into my head or how that left. Um, but the opposite is completely true. You make more money on
Yeah.
the longer time frames. There's no
Yeah. I think,
trend on the
I
one
think that's
second.
what's the stat? It's like something like 90% of the movement for stocks happens overnight. Like,
Right.
it's crazy. Like, the stock relatively does not move during the day, and most of it happens overnight. So if you trade higher time frames and you're in the trade longer, um, you can capture more of a move, and then the slippage is basically irrelevant at that point. But I get why people don't want to do that, because they don't like holding overnight, and um, people just they're scared, But I think the best choice is, personally, to be out in the trade longer. There's more meat on the bone. You have enough profit to pay for the slippage, enough money to pay for the commissions, all of that. And even after paying everything else, you've got enough left for yourself.
That's right, exactly. I run a VWAP strategy myself, which my God, I'm so happy that Mike introduced me to it. But I'm even trading. I need the trend from yesterday, and I'm trading over a 7 day period. And there's nothing. I enjoy that feeling, John, of waking up in the morning and looking at my phone and figuring out, hey, did I get stopped out or not? I like that, because if I'm sitting in front of my computer watching it, I'm going to screw myself out of these trades 9 times out of
Yeah.
10. Doesn't matter how automated it is.
And I trade with the R system. So, like, I always have the same amount of money risked. So my stop loss is always at a point where I'm going to lose 1 R. And
Right.
I might risk 1, 2, or 3 R, but it makes it a lot easier, in my opinion, because you always know what your risk is. So, like, you're either going to win or lose the trade. And if you lose, you know exactly what you're going to lose. And it's not that big of a deal. It's just an R. And
Right.
as long as your win rate is, you could lose half your trades. If you're 2-to-1 risk to reward ratio, you can still make money having lost half your trades.
That's right.
So
And I
that's
do
that's
3 to 4 hours, so I can lose a lot in a row.
yeah.
All right. Next up here, is there any hope to setting a relative take profit and stop loss based on the fill price for trade evade accounts?
I don't know of a good way to do it. It's a limitation on the trade of eight side. If we were to build something on our side, there would technically be a window where we submit the entry order. We have to wait for that entry order to fill, And then as soon as the entry order is filled, we would have the average fill price, and then we could submit the take profit and stop loss. But you have this, albeit small, but you have this window of time where your position is unprotected, and the market could wick down and go just crash right in that second, and you wouldn't get stopped out. So in addition to that, TradeAway doesn't have a way to submit a bracket order separate from the entry. Right. So like they have the ability to submit a take profit or a stop loss, but there's no way to bracket them together conditionally so that when the take profit fills, the stop loss gets canceled or vice versa. So I really don't know. I right now there's no technical way to do it that we've been able to figure out. And it's kind of related to Lath's question in the chat. Why no stop loss integrated with Coinbase or Robinhood? When could we expect this? So it's a limitation of the broker, the API. They don't have the ability to submit a bracket order attached to an entry order, meaning there are 3 legs, two to 3 legs. You have the entry order, and then the take profit and stop loss are like nested within the entry order. So the broker has all 3 orders, and when the entry order fills, the 2 other orders become active. And then as soon as one of those conditional orders fills, the other one gets canceled.
That's right.
And Mark just pointed out you could actually, can you just code in TradingView to calculate the values and set trade entries? You could do that, but you wouldn't know the fill price in the broker.
Right.
So the only way it would work is if you're using limit orders and you're sending the limit order with a limit price to TradersPost, and then you could do it that way.
Yeah, that's right. Limit orders is really the only way of going about this. Although the market order wasn't such a big deal, except for the one situation with the client where they were setting their the difference between the stop loss and the entry was so small that it automatically got rejected. The trade got rejected for the trailing stop.
Yeah, it's also related, kind of what I was saying before. I personally think that's too tight. These are people who are trying to like trade in very small windows of time, and they're using market orders, and their stop is basically smaller than the amount of slippage that you might get on a market order. Right. So there's just no way that it could ever work unless you're using limit orders. But then the downside is you're probably going to miss a lot of those limit orders from getting filled because the market moves so fast in between when the signal generates and when the signal gets to the broker that you're going to miss some of those orders.
On the heels of what we were saying before, this is the age-old question: what is the best strategy you should use? So just to boil it down here, because we're talking about Mike and I, we talk about this all the time. That really, there's only 3 strategies. There's momentum, there's mean reversion, and then there's buy and hold. It's very hard to beat buy and hold. Like I don't even try to beat buy and hold. I always have a buy and hold account. And then all the every market participant, almost every market participant has, including governments and banks and all that, have an incentive for charts to go up and to the right. But as far as if you have to choose between trend following and mean reversion, I go trend following all day, every day. Even though my VWAP strategy is a mean reversion, I would do trend following because you can be in it longer. If you catch it, you catch it. You know when you're inside of the trend. You can miss the first 30% of it and still be fine. Whereas mean reversion, you can be right on the direction of the mean, get in at the wrong times, and lose, even though you were directionally right for each one of the trades.
People just don't have the patience either with trend following. I mean, you could have a strategy that kills it 9 months out of the year, but like for 3 months, it does nothing and draws down 10, 20%. And people just, I get it. It's hard to sit through that, but I think that's what it takes.
Right. So Mark,
I was going to say one other thing. I had a mentor, Jeremy Newsom from Real Life Trading several years ago, and he had a great quote: "All strategies work, just not all the time." That's so right. There is no best strategy. That is you got to get rid of that from your head. It does not exist. different market regimes call for different types of strategies. So that makes things harder because you need to find multiple strategies, not just one.
That's right. Well, I have the strategy that at every once a week, there's a setup that occurs, and if that setup occurs, then it's like 85%, 90% chance that the price is going exactly to where you're thinking. My issue is that it's the path dependency, that I'll be right directionally where it'll go, but you'll get liquidated along the way. I'm trading a 50x leverage, so I'll get liquidated along the way, and then it gets to the price, and you're like, oh my god, it got exactly to the price I wanted, but it stopped me out and then head over there, and I've not been able to figure out a way of really getting that exactly right, except for lowering my leverage. In which case, what are we doing here? I'm not supposed to buy and hold. What, reducing leverage? Come on. All right. So funny. Mark asks here. He says, so when your strategy triggers a trade entry, you enter 3 trades with 2 pending, 1 stop and 1 limit. So this is where the orders are going in, and it's not going in as a bracket order. You're sending the
Well, it's still. I mean, I guess the terminology is just it's a pedantic thing, but it's really just one trade, and the trade consists of 3 orders: the entry order, and then attached to that entry order, you have 2 orders that are conditionally attached to each other. And when one of those order fills, the other one gets canceled. The brokers call it an OCO. One cancels other.
Right. Okay. So, order of operation is super important in trading, says Mark. Absolutely. Move on to the next one. I've created 2 strategies that work at different times. I want to run one in the morning for all my accounts and the second in the afternoon. Is this possible?
Can
you do this with trading windows?
It should be with trading windows. You could have one strategy with a subscription with the trading windows for the morning, and then the second one for the afternoon. You could do it on the TradersPost side, but you could also do it on the TradingView side. You could also manually do it by just like turning one subscription on and then turning the other off. But the trading windows would definitely be possible because you can basically select Monday through Friday or whatever days you want. And you can specify a time window. And then on the other subscription, you would have a time window that doesn't conflict with the time window you've selected here.
Right. Alrighty. Next up, I need to send information on my trade to my broker for them to diagnose a problem. Where can I find that information? So I just wanted to show this because you actually showed me this the other day, and I thought it was very useful to get the debug information. So if we take a look here, and the user was actually very happy to have access to this. So if you head over to your broker, let's say I'm dealing with my broker here, and then I go to logs, I'll be able to see the request that was actually sent to that broker. So I can click in there and I'll be able to see what was requested and what the response was.
And to take that a little further, click your notifications at the top left and just go to like a real trade if you can. And do you have any?
Not on the real broker on this account, no.
Do you have, it doesn't have to be a real broker, but like, can you find one that wasn't rejected?
Let's see here.
Yeah, just click any of those. See the broker logs on the right? Down, right there. Here. That's basically the list of the API calls that we had to make to the broker in order to create the orders. And that's just like a shortcut to get to that same page.
Yeah, I just wanted to bring this up because sometimes people get the sense that we're holding back information. They're like, you know something and you're not showing it to me. It's like, no. The information is all right there for you to use.
Yeah, we don't have any additional admin panels or anything. Like when we troubleshoot problems in our support, we're looking at the exact same logs and screens that you have access to. Part of the issue might be that the user experience is not as good as it could be. It could always be improved, and we know the user interface really well, so we know where to go to look for the information. But you have access to all the exact information that we have.
Someone was saying to me that after I went back and forth with them on this point, they said, okay, but you probably have contacts at my broker that I don't have, so please contact them on my behalf. I was
No,
like,
again, I wish that were the case. It would make our lives a lot easier, but I'm not legally allowed to ask questions to the broker about someone else's account.
that's right.
When I contact the broker support, I'm verifying myself as me under my account. So if I give them an order ID that's not associated to my account, they'd be like, that's not an order associated to your account. We can't do anything. I wish there were like a inside channel where I could go to like talk to someone but I have to talk to the regular support just like TradersPost customers do.
The conversation ended with me telling the person, look, we're not finger pointing here. It's not that, because the broker was telling them to come to us. We were telling them to go to the broker. And I said, 100%, if I could give you the answer, that's exactly what I would do. We have all the incentive in the world for you to stay as a customer for us. Like, I'm not here to annoy you. I want to solve your problem. It's 9 o'clock at night. I'm answering your question. I absolutely want to solve it. And he's like, okay, thank you very much. I go, if anything comes my way, I'll let you know. If you find anything, let me know. And he's like, okay, you're right. You are helping me out.
When once you build a company and particular software as a service, like it gives you a whole new perspective on how to treat and how to talk to people who do support. And I fall into the trap too, like companies like Comcast, like I hate them. I hate whenever I have to call Comcast. It's so painful, but it's not the person's fault that who you're dealing with. Like they're doing the best that they can. In a perfect world, they would just be able to give you exactly what you are looking for. But there are always constraints, and everyone's always doing the best that they can. And generally, just give people the benefit of the doubt and be nice.
Mm-hmm. Exactly. All right. Next up over here, when in a position. All right. So this came into the support. When in a position, I don't want it to flip sides, but I also don't want it to exit if already in a position. Say it's in a long and a short alert comes in. I don't want it to exit. Would it then be best to have two strategies running that are sides isolated turned on? That way it wouldn't exit. Correct? Yes, correct.
So they only want it to swap sides if there's
they don't want any. They don't want any swapping sides. They want the long strategy just to deal with the longs and the short strategy just to deal with the shorts. And they don't want the two to interact. They don't want when a short comes in that it actually exits the long position.
Yeah, I think you would have to disable side swapping because you still want it to be both sides, but you don't want it to swap sides. So you'd set sides to both, and then you disable side swapping. There's a checkbox in the subscription settings for that. And then you would need to isolate the sides. So like if the long strategy is in a long position, but then another strategy tries to go short at the same time the other strategy is long, then that short trade would get rejected.
That's right. Okay. This is I wanted Peter here for this one, but let's just go with it. I'm trading options. Explain the both call put option type like I'm a beginner to options. All right, so John, I want to give this a try because I'm going to try to get this in one video because I'm sort of helping to rewrite a little bit how it's worded, and I just want to make sure that I got the pitch clear enough. Are you willing to humor me here?
Sure.
All right. So let me just pull it up here so you guys can actually see what we're talking about. So that's when you're inside of if you're trading options, under asset class, you have an option here for option type, and you have this option for both call and put. And what this means is this will set how TradersPost interprets an action buy or an action sell. All right.
So
go ahead.
You ready? We ready? Yeah. Okay. So at the root of it, TradersPost, if you don't specify the exact contract that you want to trade, it scans the option chain to select a contract. So when you have both selected, what that means is when you send an action of buy, it's going to open up long calls. And when you send an action of sell, it's going to sell to close those long calls and buy to open long puts. because long puts are bearish and an action of sell is a bearish signal. So basically, bullish, long calls, bearish, long puts. If you select call, then it's basically going to buy long calls, and then when you get a sell signal, it's just going to exit those long calls. And the puts is the same thing except the reverse. When you get an action of buy, it's going to sell to open puts, and when you send an exit signal, it's going to close those puts.
All right, so let me try a pitch here just to make sure like I've gotten the idea here, because so when you're buying the option, and if you want to deal with both calls and puts, you want to be trading both, then the both option, your action buy will buy a call, action sell will buy a put, and if you want to close any of those positions, you have to send action exit, right? So action exit works on the both one. That's correct. For the call, you're saying, I only want to deal with calls. I don't want to deal with puts. I only want to deal with calls. And so it makes sense. I'm going to buy a call to express a bullish position, and I'm going to sell that call if I'm no longer bullish. I'm only dealing with calls. With puts, this is where it gets tricky. With puts, I only want to deal with puts. And you might think then, okay, so I'll just buy a put when I'm sending an action buy, and I'll sell a put when I'm doing action sell. But no, it's actually the reverse. The put one is where it's actually reversed.
Correct. And I'd like to make that setting something that you can control. The root of that is because people are trading options based on the underlying chart.
Right.
So if I'm trading the underlying, say Tesla, and Tesla is going down, and I get a sell signal, I don't want to short puts. I want to get long puts, because long puts are a bearish position. So I'd like to make that setting explicit so that you can control that, so that you could basically make action buy or sell actually just do exactly what it says. And it would only be something that maybe you would turn on if you're trading options from a strategy that's running on the underlying chart, on the underlying asset for the option. So that, and that's, originally everyone was using TradersPost that way with TradingView, but as we've grown and as we've gotten more complicated, people are, and now that TradingView has option support, that whole idea is kind of invalidated.
So would it come down the pike one day where the put that's switched and it's actually
well, we wouldn't change it for everyone. It would be like a setting where like the setting value for gets set to like the behavior it is today, so that everybody's behavior stays the same. But then going forward, you would be able to like turn off that setting so that the action is respected. And if I send action sell and I have puts configured, then it's going to sell to open puts instead of buy to open long puts.
That sounds suspiciously like adding a fourth option to this list.
It does. This gets complicated, man, and it's hard to make changes to software once people are using it, because you can't change the behavior for everyone else out there. But you want to give people new settings so that everyone going forward, when they create new strategies, they could maybe turn that setting off. It's really just, I want to make that inversion behavior an explicit option. Right now, there's like an implicit behavior that's hard coded in the back end, and the action buy or sell is basically flipped when it comes to puts.
Right. I would only make one suggestion here on behalf of the audience, and that's in this drop down. Do you think it makes sense that instead of the description the way it is right now, that instead of saying bullish and bearish, it actually says action buy and action sell the way it does in the documentation?
Maybe.
Because so only when I went from this to the documentation, I was like, oh wait, now I get it. But here, because they're saying bullish and bearish, I didn't understand that you were talking about the action attribute,
right,
or parameter.
Yeah, it used to actually, like if you scroll up. Oops, sorry. Yeah. So if you scroll up to go to the first section, subscription details. So sides, that drop down used to be bullish used to say buy and bearish used to say sell.
I see.
But then when we introduced the options asset class, that no longer made sense
Right.
because puts are reverse basically.
Right.
So it was changed to bullish and bearish. But yeah, maybe there could be more description there. But essentially today, just remember, action buy means it's a bullish signal, and action sell means it's a bearish signal.
That's right. All right. Feature request. Can I put in a request for a faster way to turn off all strats? It's a long clicking game. When I hit my take profit, I need to click into 15 strats to stop.
Yeah, it might be useful to have like an account level disable so that you can turn them all off, or just a way to disable all strategies.
Right. Perfect.
Uh,
Oops, sorry.
Well, one thing I was going to say, and I think another way you could maybe do that, um, well, you could pause all alerts in TradingView. I think that
That's
would be
right.
another fast way to do it.
That's what they were
That,
telling the person on Discord. Pause your
yeah,
alerts. Yeah.
yeah.
All right. This was a fun one. Guys, you will need to implement this exit signal feature based on current setups on TradingView algos alerts. This would make it so much easier if we could block entries at certain times on TradersPost, but still allow exits of open positions. This needs to happen like yesterday.
Let me read that again. So that he wants to.
In the trading window, when the
Oh, I
smoke trades,
see.
allow exit.
Yeah. Yeah. So like another setting that you could basically a checkbox that says allow exits.
That's right. It was, I think I saw 4 people respond to the same thing. Like, yeah, we absolutely need to have this option. Oh my God. That was
Yeah,
pretty funny.
it's tough. I see the use case for sure. That'd be a nice one to have.
Yeah. And that, along with this other one, this is also very popular. Is there a way to time limit a trade? For example, at the end of 15 minutes, sell the position.
There isn't in TradersPost. The best way would be in your Pine script to do that today.
Right. One last thing then for that. Again, as my hat as a representative of the people, once you become big like TradesPost is, you're going to need ambassadors. I get it. The idea here is OSO orders, where you can, so it's order send order where there's an expiration on the limit order.
I've never OSO. What does that stand for?
Order sends order. So it's a type of conditional order where you set an expiration date for the limit order, and then that limit order expires. It's something that's been coming up over the last weeks with Mike and I've been talking about, where people want a way of being able to manage multiple limit orders as opposed to be canceling all the open orders on their account. They go, no, I just want to cancel those 3. But if this was the first time I heard someone mention this type of format, which I believe is supported by TradeStation.
I think the brokers call it good till date. It's like good till canceled, but like good till canceled is like brokers, when you send a GTC order, like there really is some date that it's good until. It's just really far out. You know, some brokers it's 3 months,
Right.
some a month, but good till date is basically the same thing, except you explicitly control the date that the order is good until. But I don't think they give you it's days, not like the granularity level is days, not hours or minutes.
So the example that I wish I had it pulled up here, but the example that the user sent was for this broker, and you can actually send like literally to the second.
Which broker was it?
I think it was TradeStation. I could pull it up pretty quick here. I think OSO. Yeah, so it was TradeStation. Yeah.
I'll have to look, but part of the issue too is like he's probably looking at if they support it from like the broker user interface level, but whether they support it from the API is like
it's from the API. He's specifically saying that the TradeRate API supports OSO with expired time, and you could provide the timestamp for when it expires. Although it does say time enforced day, so I don't know if it's like that matters, if it's actually taken the minute or second into consideration.
Yeah.
But when I was looking it up, like these specific type of orders, like I went through all the brokers on our list, and most of them didn't support this feature.
Yeah.
So I
Yes.
was going to tell them like we can't. It's hard to implement the feature when like one broker has it.
It is tough. It is tough to do. I mean, we do it now. Like we do have feature flags per broker. But yeah, it just gets infinitely complex when you have like all the matrix of features that some brokers support and others don't. But it's also trying to decide what features to implement, because there are infinite permutations of the ways in which people can trade. And it's tough because it's a common trap to fall in when you're making software, is to try to like implement every little thing that one customer asks for. And I'm not saying that thing that one customer wants isn't invalid. It's just you can't realistically implement every single little one-off thing that every single person wants. It'd get really difficult to maintain the software, but also then you just have features that only get used by one customer, and that maybe that customer doesn't stick around, and then you're stuck maintaining this feature forever. It's like you're walking through the desert and you have to carry these features on your back, and the bag of features on your back just keeps getting heavier and heavier, and you have to carry it forward with you forever. So we put a lot of thought into picking and choosing like which features we want to support, and try to pick the ones that affect the most customers. But I get it. Everything is really important relative to you. So it's tough to hear that, some feature might not get selected because it's not something that's widely needed.
Well, if it sweetens the deal, I could just pitch the way that other people pitch me for clients. They'll say, well, the money that I make on this, I'll give you a cut off of it, so it's worth it for you to actually do this feature. I'm like, well, that's great. How about you just make the money and you come back to me later on and pay me for the full, for the full feature?
Yeah, that's funny.
All right, so we got other questions from the chat I forgot to take a look at here. Last question: do we have any way to connect TradersPost to a wallet, a crypto wallet, instead of the exchange? Ooh.
I don't know the answer to that. I mean, isn't that the whole point of a wallet? Is that like there's no centralized? I don't know the answer to that question. Is there an API for like Coinbase wallet?
Oh, I don't know. Don't know about that. But I guess they're talking more like what you see with swaps, like Uniswap, SushiSwap, or whatever, where it's tied directly to your wallet.
If it's like a physical wallet, like literally like a device like that I physically have.
No, like a crypto wallet address. Because like when I connect to a decentralized exchange as opposed to a centralized exchange, I'm doing peer-to-peer directly with my own wallet.
Gotcha.
But I've never seen like, exit orders or anything like that. It's like just a market order for whenever the swap happens.
Yeah, I have no idea.
Sure.
As I was saying earlier, there's so many different things that people want and want to do, and that's just not something I've even thought about.
Perfect. Okay, so that's it for the questions we have for this week. Thank you, John, for taking the time, getting out of the bowels of TradersPost to come answer some questions. I'm sure people appreciate that. We will be back next Tuesday, as always, at 3 o'clock for more office hours. So please give your questions and support on Discord. Leave a message in the comments on YouTube. We'll take a look at it. We'll be back on Thursday for Blueprint, where we'll be taking a look at the new alert watch list feature from TradingView, and on Friday with Mike for market commentary. So anything that you want to take a look at that happened this week, we'll be going over that there. But for now, I'll say thank you very much for giving us your time, and we look forward to seeing you next time.
Awesome. See you guys.